Top stock investors choose to support companies that are not only financially successful, but also devoted to addressing climate change, developing clean energy, and implementing environmentally beneficial practices. So, here is a performance overview of the 12 best environmental stocks to buy. General Motors on number 12. Why is General Motors on this list of the best green energy stocks to buy? Because the car maker is going all in on an electric future. The company has said that it plans to invest $35 billion in EV and autonomous vehicle production through 2025. By mid-decade, GM plans to sell 1 million EVs a year in North America. GM, which sells vehicles under the Chevrolet, Buick, Cadillac, Biojun, and Wuling brands, also jointly developed its Ultium battery platform with South Korea's LG Energy solution to mass-produce battery cells. GM is projecting that its next-gen Ultium packs will cost 60% less than existing batteries in use today, with double the energy density. Waste Management on number 11. Waste Management is a large American waste collection and disposal corporation. It provides entire waste management, recycling, and environmental solutions. This company is devoted to reducing waste's environmental consequences with the resources of selling recycling and sustainable waste management practices, contributing to additional hygienic and environmentally friendly surroundings. Number 10 on this list is Johnson Controls International. JCI, listed on the NYSE, is a multinational corporation incorporated in 1885 and headquartered in Cork, Ireland. It focuses on building technologies and solutions. Its primary goal is to develop energy-efficient, sustainable technology for smart buildings and urban areas. JCI's services and products attempt to reduce power intake and environmental outcomes while enhancing constructing comfort and protection, thereby contributing to long-term sustainability. Fluence Energy on number 9. A US-based company specializing in renewable energy storage solutions and services, Fluence Energy also provides AI-powered digital applications tailored to the aforementioned areas. A Siemens and AES company, Fluence operates in more than 40 markets globally, and its notoriety has secured the position of being one of the leading global suppliers of battery-based energy storage systems. Fluence is one of the foremost storage providers in the US, holding a 22% market share. Number 8. Ormat Technologies. Ormat Technologies focuses on creating electricity using eco-friendly methods. They have power plants in different parts of the world, like the United States, Kenya, Guatemala, Guadeloupe, and Indonesia. These power plants use special technology to generate electricity in a clean and sustainable way. Recently, they have also announced a significant acquisition. They are set to purchase a portfolio of assets from Enel Green Power North America, including geothermal and solar power plants. First Solar on number 7. First Solar develops and manufactures thin-film solar panels that use their larger size to generate more energy than competing technologies, making them ideal for utility-scale solar energy projects. As one of the world's leading solar panel makers, the company is in an excellent position as demand for solar panels accelerates. It's actively investing to increase its capacity to produce solar panels and meet demand. Number 6. Brookfield Renewable. Brookfield Renewable is a global leader in renewable energy. It's one of the world's largest producers of hydroelectric power, which will make up 50% of its portfolio in 2024. Brookfield also has been increasing its wind, solar, and energy storage expertise. The company sells the bulk of its power under long-term PPAs that generate steady cash flow. Brookfield sees even more growth ahead. Annual FFO per share growth of more than 10% through 2028, powered by its extensive pipeline of renewable energy development projects and additional acquisitions. Clearway Energy on number 5. Clearway Energy, listed on the NYSE as CWN, is a major owner of renewable energy generating facilities in the United States. Clearway generates steady cash flow by selling its power through power purchase agreements. With its ongoing efforts in expanding its renewable energy operations, Clearway Energy is in a great position to create substantial value for its shareholders in the upcoming years. Number 4. Watts Water Technologies. Watts Water Technologies manufactures plumbing, heating, and water quality products for various customer segments, including residential, industrial, municipal, and commercial users. The company's pressure-reducing valves contribute to water conservation on a global scale, saving over 19 billion gallons of water annually. Additionally, their high-efficiency gas-fired boilers and water heaters have helped customers reduce carbon emissions by more than 100,000 metric tons in the previous year. Number 3. Enphase Energy. Enphase Energy, having its headquarters in California, is a specialist in clean energy technology. They offer various products like solar microinverters, EV charging stations, and energy storage solutions. Enphase is a leader in its field, with a global presence in over 140 countries, making it a strong contender among clean energy stocks. Many experts and their research pointed out the company's potential benefits from share repurchases, growth in the European solar market, and a clear resurgence in US residential solar installations. Ecopro on number 2. Ecopro is a Korean battery materials company that holds a significant position in both MASGX and KOAR's funds, ranking as the 8th largest holding in MASGX and the 15th largest holding in KOAR's. The company's emphasis on environmentally friendly practices positions it well for success, and it can perform just as impressively as firms without an explicit environmental focus. Number 1 on this list is Nextera Energy. As the world's largest producer of wind and solar energy, Nextera Energy is a go-to recommendation for people who are interested in buying a renewable energy stock. Many investors see a compelling buy opportunity in this stock for several reasons. Firstly, the company achieved a remarkable 10.6% year-over-year growth and 11% year-to-date growth in adjusted EPS for the third quarter, marking its financial stability and profitability. Moreover, Nextera's Energy Resources division experienced a significant 21% growth in adjusted earnings, primarily driven by robust contributions from new renewable investments. This substantial pipeline of renewable projects positions Nextera Energy as a key player in the growing green energy sector.